CEO from an airline of the conference to speak today. It's the group CEO from Arik Air in Nigeria. They are Nigeria's and West Africa's biggest carrier, and they're also a customer of Standard Chartered Bank. At Standard Chartered, we want to be banking the people and companies that drive investment, trade, and the creation of wealth right across Asia, Africa, and the Middle East. And there's no doubt that Arik Air has been doing that. It's really good as well. I mean, I know Nick Fadugba is in the audience from the African Aviation magazine, and he has spoken at length about the need for us to see African CEOs coming and telling us the story. And I know that Arik have a really good story to bring. So please welcome to the stage Dr. Michael Arumemi-Ikhide. Good luck, Michael.
Appreciate it. Thanks, my friend. Okay. Good afternoon, ladies and gentlemen. Thank you, Will, for that very generous and kind introduction. It's a pleasure to host you here and to be part of this conference, and I thank you for your audience and your attention. Ladies and gentlemen, I'm here to tell you a story about our airline, Arik Air, which in just over 8 years has become the preeminent airline in Nigeria and West Africa. I'd like to tell you this story briefly in the 30 minutes I have of the development of this airline in the context of the renaissance of the African aviation sector. So we'll proceed. So for those who are less aware, or for those who are familiar with the African continent, a brief overview. Africa is constituted of 54 countries, about 1.1 billion individuals. It's a huge continent of 30.2 million square kilometers, endowed with a plethora of natural resources, minerals, fossil fuels, and precious metals, with a variable topography and climate. Now, for a lot of you who are familiar with Africa, its previous or stereotypical image will be the one that is most present in your mind when you think about a continent. And when I say that, I mean, for instance, its association with poverty, political instability, corruption, economic mismanagement, illiteracy, and high unemployment. However, it's important to note that this has changed significantly today. And the Africa of today is no longer the ravaged continent of the past. Rather, it is synonymous with better management of the economy, resulting in strong growth, increasing wealth, poverty reduction due to an emerging middle class, greater political stability, and more robust financial institutions. So to take a little bit of a look at this is a graph showing the GDP profile of Africa from 2010 and up to the forecast in 2015. And we see that Africa is growing faster than the developed economies and the rest of the world combined. In 2013, it reported a growth of about 4%, just below that of the developing economies, but certainly twice the world average. What are the key drivers for this growth? A commodities boom, coupled with high commodity prices, tighter trading with emerging economies, greater domestic demand from the growth of the middle class, infrastructure development, critically, technological advancement, and political stability. Increasing foreign direct investment, official development assistance, and remittances, and critically also debt forgiveness. This chart here is one produced by Ernst & Young, and it demonstrates the increasing attractiveness to do business of Africa year on year. And we can see as in 2011, Africa has moved from its position of the eighth most attractive market up towards the second position in 2014. Now, foreign direct investment is a key metric of economic growth. And FDI to Africa has grown from approximately 10 billion to over 50 billion in just over a decade. By way of illustration about the increasing attractiveness of the continent, a recent publication by African Venture Capital Association and Cambridge Associates reports that a consortium of international investors achieved an impressive 11.2% annualized return on African private equity funds over the past decade. I'm sure most of you would agree this is a figure which is comparable, or in some cases, in excess of achievable returns in more developed markets. Demonstrating the technological advancement of the continent, Africa currently has over 650 million mobile phone users, making it the fastest growing market in the world. As it readily circumvents some of Africa's infrastructure limitations, mobile technology is transforming access to services such as banking, insurance, healthcare, education, and transportation. However, whilst all I've said is unimpeachably true, despite the advances, vulnerabilities such as lack of adequate infrastructure, particularly in the areas of power and transportation, continues to militate against the realization of Africa's undoubted potential. In fact, the African Development Bank estimates that Africa has a 93 billion annual infrastructure deficit. Now, addressing this deficit would help boost GDP on the continent by approximately 2% per annum, helping to pull millions out of poverty. Now, as far as this audience is concerned, from a discerning investor or entrepreneur's vantage point, these unfulfilled demands, such as in the area of power and transportation, and particularly air transportation, represents opportunities for establishing high-growth, high-earning businesses within nascent and relatively unsaturated market pools. Now, air transportation's role in the ongoing development of African nations cannot be overemphasized. In fact, it may be argued that without a viable aviation sector, many African countries may not be able to achieve their economic potential and realize the birth of modern societies. In fact, the founder of EasyJet has described Africa as the final frontier of the aviation revolution. And analysts believe that conditions in the continent represent a huge opportunity in the coming years and a chance for the continent to reverse its unwelcome legacy of suboptimal practices. Now, historically, whilst Africa accounts for only 3% of global traffic, it disproportionately accounts for nearly 25% of air accidents. The African air market comprises only 1 seat per 13,000 people, compared to 1.5 seats per person in Europe. Having said that, whilst coming from a low base, Africa is, however, showing robust passenger figures. The graph shows the total passenger growth by region up to the year August 2014, and we see that based on IATA's data, this is compiled from IATA, only the Middle East and Latin America grew passenger numbers at a faster rate than Africa in the 12 months to August 2014. Now, on a regional basis, West Africa has, over the past 5 to 7 years, recorded an average year-on-year passenger growth of 8%. This correlates with West Africa's leading GDP growth trend, as described in this particular profile here, showing the GDP of the sub-regions in Africa. And the critical thing to note is it's not homogeneous. West and East Africa are leading the GDP growth profile at approximately 7% compared to the other African regions. Of crucial importance to the materialization of Africa's aviation potential is the rapacious growth of the middle class. Now, the rise in incomes and increased consumption of this segment of society accounts for much of private sector growth and is expected to generate ever stronger demand for air travel. Now, as we have seen on a regional basis, the West African sub-region is at the forefront of Africa's GDP buoyancy. Underpinning West Africa's high GDP growth rate is Nigeria, a nation which accounts for more than 77% of the region's economy. Nigeria's geography and scale of economic activity makes it a natural hub for aviation in West Africa. With a population of 178 million souls, Nigeria is the 7th most populous nation globally and accounts for more than 50% of West Africa's 330 million citizens. Nigeria is rich in minerals, has proven oil reserves of up to 38 billion barrels, proven natural gas of 190 trillion cubic feet, and fertile land for sustainable agriculture. So it's rich in both extractive and human capital. Based on following its rebasing of its GDP, Nigeria is now officially the largest economy in Africa and the 23rd largest in the world. As a lot of you are aware, Nigeria is also being classified as one of the mint emerging economies. Foreign direct investment from China, US, UK, India, and South Africa has boomed over the past decade in Nigeria, rising from just about 1 billion in 2001 to over 11 billion in 2013, and it accounts for roughly 20% of the foreign direct investment flows into Africa. Now, as with the rest of Africa, Nigeria's economic renaissance has been underpinned by political stability, growing middle class, the increase in FDI, attractive investment, a youthful population, the use of technology, and structural and regulatory reforms, such as government initiatives such as the Central Bank of Nigeria's reform and strengthening of the financial sector. As a result of the oil industry, Nigeria represents one of the major arrival points in Africa for non-African visitors. Now, it's commonly understood that the Lagos-London route is one of the most profitable sectors for some well-known legacy carriers. Importantly, current 20-year market forecasts by IATA, Airbus, and Boeing unanimously project annual traffic volumes to Nigeria and West Africa to grow by approximately 8%. This is well ahead of the world average and second only to the Asia-Pacific region. In terms of domestic opportunity, Nigeria is the 32nd largest country in the world with a landmass of over 900,000 square kilometers, a variable topography that makes air travel essential, and limited connected subsurface transportation. Lagos, the commercial hub, is about 330 miles from the political capital, Abuja, and both are hundreds of miles from the oil-producing regions in the southeast. Roads connecting them are poor. Given these physical conditions and subsurface transportation limitations, many Nigerians have little choice but to fly. Now, whilst income distribution in Nigeria remains concentrated in the hands of the top 20%, other indicators point to the growth of a middle class. Internet penetration, which is a commonly used proxy for the middle class lifestyles in developing countries, is estimated at about 29%, or 45 million people in Nigeria. Mobile penetration is at 66%, or just over 110 million people in Nigeria. Now, as you're all aware, both of these are key enablers for the aviation sector. In fact, mobile phones are likely to become the key payment method in Nigeria and Africa at large, given the low penetration of credit cards through the region. Now, according to statistics produced by the Federal Airport Authority of Nigeria, passenger movement in Nigeria has grown by a compound average rate of about 10.2% per annum since 2005. Now, despite this notable growth, and whilst Nigeria is the third largest market in Africa in terms of overall seat capacity, when considered on a seats per capita basis, however, it has just 0.07 seats per person. Now, to bring seats per capita in line with the average of its peer group, Nigeria would require about 40 million seats per annum, an increase of about 260%. Now, all of this suggests that the growth prospects for Nigerian aviation, where airline penetration is about 10%, are indeed significant. So, in summary, with its significant population base, growing middle-class demographic, GDP per capita, abundance of natural resources, favorable geographical position to a plethora of large markets, government and regulatory reforms, including Nigeria's signatory to the Cape Town Convention, of important note to a lot of our aircraft financiers here, West Africa, and in particular Nigeria, represents an attractive growth market for investment in and development of key enabling sectors such as air transportation. Now, ladies and gentlemen, having painted that backdrop and giving you the context of the African aviation market, it is appropriate for me now, let me give you a bit of a brief synopsis of a case study of an indigenous airline that has been able to translate the opportunities in this market with the challenges involved and help develop the aviation sector and develop a viable and successful business platform, and that is us, Arik Air. Why is it that Nigerians flying in their homeland do not enjoy the same level of safety and comfort that exists in Europe and North America? This was the question back in 2002 that the chairman and founder of Arik Air, Sir J.I. Arumemi-Ikhide Johnson, posed. Back at that time, Nigeria had come through a plethora of problems in the aviation sector. Its national carrier, Nigerian Airways, was defunct and been liquidated at the turn of the century. There were a plethora of indigenous airlines in country, operating aged aircrafts well in excess of 30 years. In fact, some of them had single aircrafts in their fleet. And Nigeria went through a spate of some severe air accidents, particularly in the period of 2004 to 2005, where in that single 12-month period, we lost over 400 individuals. The public mood, both internally, the external business society as well, became intolerant of this sort of poor practices and the deleterious state of the Nigerian aviation institution. With that in mind, it became clear that we had an opportunity here to do something different, to birth a world-class airline. And the incumbent government of the time, together with the traveling public, who, as I've mentioned before, had little choice but to travel, were very receptive to the birth of a new sort of aviation operator in country. So, our core purpose, our principal reason for existing, was clearly to provide world-class experiences and services which are first and foremost safe, reliable, and which continually contribute towards both improved user quality of life as well as the elevation of Nigeria's global standing. Now, a picture paints 1,000 words, and so I have some diagrams to show you here. Doesn't make for pleasant viewing, some of this. This was the former Nigerian Airways hangar, which was liquidated. They auctioned off a lot of their premises. This was back in 2000. This was put on the market. By 2003, we acquired this. This was the state in which we found it. And we renovated it after a period of huge works, and this is our facility. This is our headquarters in Lagos, and this is just before we launched in 2006. These, again, are some very, very upsetting images, but these were some of the last, in fact, the last commercial aircrafts to come into Nigerian airspace prior to Arik Air for over 20 years. These are the aircrafts left by the former Nigerian Airways, the national carrier. This was the state in which we found them. Of course, they were all beyond economical repair, and we had no choice but to actually get rid of these particular aircrafts. Now, in 2006, we acquired 3 brand new CRJ-900s, becoming Bombardier's first CRJ-900 customer on the continent of Africa. We secured financing from Export Development Canada, and with that and 2 737 Classics, we launched Arik Air 30th October 2006. This is the initial cohort of Arik Air, and from here we have grown to over 2,000 individuals spaced across Nigeria, West Africa, United Kingdom, United States, Johannesburg, and just recently, Dubai. I mentioned some of the infrastructure problems that are present in country, and this is a very good example. This is the National Air Force Base in Port Harcourt. Port Harcourt is the oil segment. And what we had to do, there weren't any connections into this particular territory, and in order to service the oil needs, we developed this terminal, what we call the Garden City Terminal. So Arik actually developed that particular terminal so that we could have direct access into the oil market. This actually became one of our strongest, most profitable routes. So the concept of Arik Air is based on 2 things: brand new aircraft, setting brand new standards, particularly in the area of maintenance, all for a new experience. To tease out the key 5 elements of our strategy: 1, modern equipment and new technology. A young fleet, as I've described, would aid and drive standards to drive us towards international standards, reduce maintenance costs, and secure greater reliability, and more importantly, engender greater market confidence. Higher standards of maintenance, regardless of the age of aircraft, high quality maintenance and professional maintenance was and remains non-negotiable in achieving Arik's long-term plans. Our hitherto and continuous contracting of top-tier maintenance providers such as Lufthansa Technik, Samco, and Iberia Engineering underscores this commitment. We also focus on service quality management. Prior to Arik Air's involvement, the notion of excellence, etc., and world-class customer service simply was unheard of in our market. And we decided to birth these, what we call threshold competencies in the more developed markets, into the Nigerian aviation sector. Critically, best-in-class human capital. We achieved this through a blend of expert expatriate management and best-in-class local employees. Thus, we've assured ourselves committed to the task of gearing our operations towards the highest standards of IASA, FAA, and ICAO. We have expert expatriate management from the likes of British Airways, Singapore Airlines, Lufthansa Technik, Ryanair, etc., all based in country in Nigeria. And last but not least, connectivity. Prior to Arik, only the what we call golden triangle, Lagos, Abuja, and the oil sector, Port Harcourt, was connected. But we came in with the philosophy of connecting the entire country, all 22 airports, and using Lagos and Abuja, our 2-hub strategy, to offer long-haul services. So, in summary, a quick historical snapshot. Founded in 2006, we started with with private jets. Domestic operations followed with the CRJ-900s, as I mentioned. We launched 21 destinations in just 5 years. We, as I've shown you, facilitated the development of domestic airports. We launched regional flights to 8 destinations and launched our long-haul flights by the acquisition of 2 brand new A340-500s. And we've been the market leader in Nigeria since 2009. We've achieved a lot of firsts. We're the first CRJ 900 and Q400 operator in Africa. We're the largest commercial airline in West Africa, as I've mentioned. We operate 120 daily flights. We're the only airline to train long-haul Nigerian pilots. And importantly, we're the first Nigerian AOC holder accredited by the Federal Aviation Administration of the United States of America. Again, these successes are founded on some key things. Our people. We employ a diversified workforce of over 2,400 individuals, as I mentioned. And I think importantly, world-class maintenance. Lufthansa Technik, who manage our Boeing narrow-body fleet, Iberia Engineering, who manage our Airbus fleet, and Samcon Lufthansa CityLine, who manage the Bombardier fleet. We have full service contracts of these individuals, not arm-length relationships. These individuals are in country 24/7, 365 days a year, giving us total maintenance cover in country. Again, showing our commitment to underscoring the highest maintenance standards. Again, just an example of some of the world-class partners we have on board: Standard Chartered, Pembroke, Rolls-Royce, Airbus, Cranfield University, and many others. Some of the awards: Organization of the Year, we won that in 2014. I think very importantly, the one I'll draw your attention to, we received the presidential recognition last year for being one of the top 100 companies in Nigeria. In fact, we're the youngest company at just 8 years to be classified in that group of top 100 companies, which included a lot of the multinational and oil conglomerates. I think very importantly, also best security and safety conscious airline in Nigeria and West Africa. We've won this 4 years in a row. So a look at our network. Lagos and Abuja are primary hubs, 31 destinations, 19 domestic, 8 Western Central Africa, and we have 4 long haul. Johannesburg we do daily, London Heathrow daily, New York 3 times a week, and we've just launched our Dubai service where we connect Lagos to Dubai via Abuja. Again, this is a very good demonstration of our Lagos hub. Our strategy is very simple: dominate Nigeria, connect West and Central Africa through the Lagos point, offer long-haul connectivity out of Lagos. Similarly, also, same thing applies to Abuja. Dominate the Nigerian segment, connect the regional Accra, and also long-haul where we connect Dubai through Abuja. Let me just say to you, very importantly, prior to Arik Air, this map simply didn't exist. None of these services were in place. We came in and we stimulated demand by launching all these routes. None of this was here before Arik, but we launched all of this. Our fleet comprises 28 aircraft, 26 commercial service, and 2 executive charter. We have the youngest fleet in West Africa at 7.5 years compared to the country average of 11 years. This just shows our commercial plan. In simple terms, we're looking to grow our fleet from 26 commercial aircrafts by over 40% over the next 5-year period. We'll be bringing in 787s where we have firm orders, and 777s as well to replace the A340-500s by the 2017 position. In terms of our strategy, focus on West Africa, continue to increase and offer more connections. South Africa, we also want to increase connectivity through the South African market. It's a key economic zone with Nigeria. East Africa, again, West and East African access needs to be further developed. United Kingdom, we operate there daily, but we feel that there's more stronger yields to be gained by other catchment areas in the UK. US, we want to increase our presence in the United States as well, possibly connecting with Washington, D.C., which complements our JFK service. And we want to connect South America to West Africa. Increased trade between Nigeria and India suggests to us that we will increase services to Mumbai and Delhi. And of course, with the increase of trade between Asia and Africa, the Asian market represents a big opportunity for us. So this quickly shows how we'd appear by the end of 2019 in terms of our total global footprint. A quick look at some of our products. This is the A340-500. I'll be quick on this. This shows you the business class and the economy class segments. This is our business class offering. Lie flat bed, in-seat massage, 17-inch screen, etc. We offer international and local cuisine. That's the Kira bar, again, a very popular segment. We apply this philosophy to all our aircrafts because the premium traffic in Nigeria is very strong and West Africa, growing by over 10% per year. So all our aircrafts, narrow bodies, CRJ 900s, Q400s, we offer a business class and economy class offering. Executive jet as well, we also have executive division where we have contracts with Chevron and we have a contract with Shell secured. OCC Center as well, we're the first in Africa to have this and the second after Emirates. Some of our products, Wings magazines, Website, fully implemented online web. Mobile site launched with the first sub-Saharan African airline to introduce a mobile and tablet booking platform. Frequent flyer program, again, with the first airline in the history of Nigeria Aviation to launch a full-fledged FFP. Sales channels, 65% of our sales are direct sales. Again, web sales growing from a base of about 5% in 2011 up to about 15% in 2014. Mobile channel growth as well. Again, what we discussed earlier, Arik is 50% in 2013 in terms of market share, well ahead of our number 2 aero contractors at about 30. West Africa, we dominate the West African market with 52% market share. Intercontinental, again, we're at 6% of total passengers on Intercontinental leaving Nigeria. Passengers flown by year, again, we're growing at an average rate of just about 7% year on year. Some of our key achievements, we're a lead carrier in Nigeria's attainment of Category 1. We're the first Nigerian airline to attain an AOC under FAA regulations. We've carried 15 million guests. We invest in human capital through CAE for our pilots, Lufthansa Technique for local engineers, Cranfield University for management. I think very importantly, we are IOSA certified, and we're the only Nigerian airline on the IOSA register. We passed our 3rd IOSA audit last year with 0, and I repeat, 0 findings. Being IOSA registered, we're also members of IATA and have been since 2011. Lately, we introduced a CRJ 1000 into the West Africa, the first on the continent. Took delivery of a new Q400 last year. As I mentioned, extended the Lufthansa Technique contract, extended Iberia. We've also signed an MOU with Emirates to develop and expand our existing interline relationship. And we've launched new international destinations, as I mentioned, from Lagos, Abuja to Dubai. Challenges, there are key challenges. Poor airport infrastructure, such as lack of runway lights, means that we're limited to daytime flying, and it has an impact on utilization. High insurance premiums, significantly higher than other parts of the world. Expensive and unreliable supply of Jet A1 fuel. It's perverse. We're one of the top 10 exporters of crude oil, yet we have to import our fuel because we don't have adequate refineries. So that's a very sore point. High airport and navigational charges for domestic airlines. Exorbitant costs and charges for importation of aircraft, equipment, spares, and such like. Difficulty in accessing low-interest finance domestically, though the financial sector is developing and becoming more sophisticated, and critically, imbalance in the bilateral services agreements. However, the government is responding to this. The government's transformation agenda, one of its key goals is to invest in transportation. Several airports across the country are being reconstructed, with over $140 million being invested in the 2014 budget last year, and introduction of Passengers' Bill of Rights. The Ebola update. I suppose I cannot do this presentation without commenting on Ebola. The first case in Nigeria occurred July 20, 2014. Arik Air suspended operations to all affected countries on July 28, making it the first airline to react to the Ebola outbreak. In addition, we took all precautionary measures to ensure our staff and passengers were not exposed. In total, there were 20 confirmed cases and 8 deaths in Nigeria. Nigeria's swift, proactive response led to the country being declared completely Ebola-free on October 20, 2014. Nigeria's response has quite rightly been widely applauded by the international community. However, 2014 Q3 and Q4 preliminary results do indicate a softening in regional traffic due to the outbreak. So, ladies and gentlemen, in closing, to summarize, on the whole, and broadly in line with the African aviation industry at large, 2014 has been a year of mixed fortunes for Nigerian and West African carriers. In the positive column sits factors such as the continued domestic and regionally driven demand for air services, fueled by rising middle-class income levels and technological advancement. Whilst on the negative column sits the perennial factors such as infrastructure limitations, varying degrees of geographical and social factors, and of course the sudden and devastating outbreak of the Ebola epidemic. All of the above conspire to arrest progress in recognizing profit levels as predicted by IATA in 2014. Nevertheless, it is expected that Nigerian and West African carriers shall contribute to the 2015 $200 million African aviation industry profit mark as forecast by IATA. Meanwhile, what is clear is that within this mix, from its inception nearly 10 years ago, Arik Air has indeed built a track record of delivering on promises, operating brand new aircraft, offering world-class product, offering first-class maintenance, developing new routes, meeting its financial commitments to the financial community and export credit agencies, developing infrastructure as I've demonstrated. We are now firmly established as West Africa's largest airline, and we're still growing. We remain committed to serving the interests and business of the people of Nigeria. Ladies and gentlemen, I thank you very much for your time.